Hey everybody, this is Mr. Roxy coming at you live from West Palm Beach in Florida. To many people, today is Hump Day because it is March the 3rd and Wednesdays are commonly called Hump Day, but not in the life of Mr. Roxy because every day is Energy Day. Today what we're going to do is take a little look at the deep freeze that happened just a couple of weeks ago in Texas and the impact that it had on various energy suppliers and companies and refiners and so on. A quick review, and then you can let me know in the comments what you think as usual. So guys, this is two words you don't typically see in one sentence. Texas and deep freeze. Oh, sorry, that would be three words you don't usually see in one sentence, but this is what we're going to take a look at today. As I said, it's Wednesday, March the 3rd, and let's take a look at what happened over the past few weeks to the energy sector and Texas as a state going through this incredibly unique circumstance. So my video here was prompted by a gentleman. I'm going to try and get his name correct. I'm assuming because there's an umlaut on the litne, it's Jan. Anyway, if I have destroyed your name in terms of pronunciation, then please forgive me, Jan, but you did prompt this video. So Jan asked a couple of questions about my ET position. Of course, many of you will know if you've been following me that I opened a position in Energy Transfer in late January. I was in time to receive a nice juicy dividend on that opening position, which I reinvest into more stock. And along with the little uptick that Energy Transfer has enjoyed since I opened that position, my overall position is up about 15%, Jan, so thank you for asking. But more importantly, he said, one thing to suggest, perhaps you can make a video about Texas freeze and how this could affect big utility players like VST and NRG. I don't know those two, but I took a quick look at them before I made the video. And then Jan concludes by saying VST pricing looks appealing to me right now. So more about that in just a second. Let's look at the macro. Contrary to the claims of green energy profiteers and apologists in the mainstream media, the failure of wind and solar power was largely to blame for the widespread power outages in Texas during the polar freeze that hit the state last month. So said not Mr. Oxy, but Mr. Burnett, who is a senior fellow on energy and the environment at the Heartland Institute. Whether you agree with him or not is entirely up to you, but what he says makes perfectly good sense to me. So he went on to explain that a large-scale power grid consists of two segments, baseload power and peaking power. Baseload power is the minimum amount of energy needed for normal daily operations. It requires a constant flow of power, and coal, nuclear, and to a lesser extent natural gas have satisfied Texas's baseload demand for the past century because they operate full time. Peaking power is the additional power that's needed when the system is faced with unusual amounts of demand. Natural gas has commonly served to provide peaking power because it can be cycled on and off quickly as needed. So there's all your favorite topics by that the people who are very focused on green energy would be really upset about already. And I'm only on basically slide number 2 or 3 of my presentation, but I've said all the ugly words: coal, nuclear, natural gas. Neither wind nor solar can be relied on for either baseload or peaking power. Now, why is that, Mr. Burnett? Wind turbines only generate power when the wind blows between certain speeds, and the power they generate fluctuates constantly. Solar, at the same time, provides no power at night or when solar panels are covered by snow or ice, and only reduce power on cloudy days and during storms. So far, so good. I think this is all logical. It's all common sense. It's a rational debate and it's a rational argument. And he concludes by saying a power system that depends on weather circumstances is a poor choice. That too makes sense to me. What he concludes with is, he says the ERC in Texas data shows that 5 days before the first snow fell, wind and solar power were providing as much as 58% of electrical power in Texas. So just a footnote from me here, on a day-to-day basis, as a general rule, renewables provides approximately 28% of power in Texas on an ongoing basis. He is saying 5 days before the storm, wind and solar were providing up to 58% of the electric power in Texas. And then as the clouds formed and the temperatures dropped and the wind stalled, etc., 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 more than half the wind and solar power went offline in just 3 days. The turbines froze and snow and ice covered the solar panels. Yeah, you know what? You don't have to be an environmentalist or rocket scientist to figure out that what he's saying is absolutely correct. Now, natural gas, coal, and nuclear kicked in, but faced problems of their own. Some gas lines froze, equipment failed, power lines snapped, transformers broke, etc. People who live in cold climates will know that if you don't insulate your pipes, they will freeze. On the other hand, if they constantly are running and are in operation, they are less likely to freeze. More coal, natural gas, and nuclear failed during the storm than wind and solar, but that was mainly because wind and solar had gone offline even before the storm hit. The effect of this was that more than 8 million Texans and more than 4 million homes lost lights, power, and heat. What is the impact? Several energy companies reported stronger than expected results. Surprise, surprise, after they were called on to provide more power at higher prices. But others face millions of dollars in losses. Gas producers. So here's a couple of examples. Some of them you might not be familiar with because they are foreign companies, especially to the average US investor. Comstock Resources said it was like hitting the jackpot. It was able to sell at super premium prices. A material amount of production at anywhere from $15 per 1,000 cubic feet of gas, MCF, to as much as $179 per 1,000 cubic feet of gas. EQT Corp said it had benefited from the high prices too. This company mainly produces gas out of the Marcellus and Utica shale regions in Pennsylvania and Ohio. Australia's Macquarie Group, the second biggest gas marketer in North America after oil major BP, lifted its profit guidance on Monday, this was a week ago, because of the extreme winter weather. Macquarie now expects 2021 profit to rise by 10% after they had just earlier anticipated earnings to drop. Surprise, surprise, ka-ching. How about the utilities? And this is where Jan's question comes in. Just Energy, which is a Canadian corporation, on Monday raised doubt about its ability to continue as a going concern. Well, that's quite a concerning comment. It forecast a $250 million loss from the winter storms. Interjex Renewable Energy. By the way, I don't know some of these companies either, so if they are new to you, they are just as new to me. Interjex Renewable Energy forecast a financial impact of up to $60. That means Canadian dollars 60 million, which is approximately 47.5 million US dollars on its Texas windstorms. Algonquin Power and Utilities said the potential hit to their adjusted core earnings were going to be between 45 and 55 million after the cold weather restricted production at their renewable energy group Texas-based wind facilities. So Jan, as I had mentioned at the start, I took a quick look at these two companies, and Jan had actually said VST, so Vistra Corp, looks like it's quite attractive at the current price. I mean, look at this little graph. So I just took a 1 month snapshot, but it dropped all the way from $24 to where it's trading right now at about $16. This might constitute an entry point. By the way, I'm just going to add a little disclaimer here. I don't know anything about Vistra Corp. This is only the snapshot that I took just before making this video. Large corporation, almost $8 billion in market cap, 92% held by institutions, which means it's sort of one of those foundational stocks that they sit on and put in their portfolio almost as a protection or a hedge against market volatility. PE ratio of only 13 is not bad at all. Annual dividend of 3.6 is quite nice as well. So Interesting company, Jan. Thank you for bringing it to my attention. VST doesn't really fit my personal investment thesis, but nonetheless, it is an interesting one to look at. How about the next one, which is NRG Energy? NRG actually looks like it's fared a little better over the last month than Vistra. It's also a large corporation, 9.5 billion. Its PE is a little bit higher, 19. Also an annual dividend of around three and a half, and also held by institutions, 94%. So very interesting corporations. As I said, I'm not familiar with either of them. These are not typically companies that I would look at for my own energy investment portfolio. They're both utilities. I am not big on utilities in general, but I do look for undervalued stocks. So thanks for drawing my attention to these two. How about the shale oil producers? This is a little closer to home for me because obviously I have some energy stocks who are invested and producing and drilling for shale. Shale oil producers in the southern United States could take at least 2 weeks to restart the more than 2 million barrels per day of crude output that had shut down. Diamondback Energy says it expects weather to wipe off 5 days of production. 5 days of production could be quite significant. For people who follow Occidental Petroleum, you will know that they drill and generate approximately 1 million barrels per day, at least half of that coming from the Permian Basin. So it's a big chunk of production and revenue as a result that gets wiped off. Cimarex Energy, once again, a company I have never heard of before, said it expects up to a 7% hit in production volume for the quarter. That's quite a big hit considering it's for the quarter and not just for the month of January. Your favorite and mine, Occidental Petroleum, forecasts first quarter Permian production of 450,000 barrels of oil equivalent per day, between 450 and 460,000 barrels of oil equivalent per day, including a 25,000 barrels of oil equivalent per day hit from the downtime related to the winter storm. Not too bad. It's like if you are drilling and generating approximately 450,000 barrels per day, 25,000 is not that much of a hit. In fact, during the Q4 2020 earnings call, which was just held a couple of weeks ago, or a few days ago, Vicky Holub, the president and CEO of Occidental, said, "We have not yet quantified the cost of either one, the oil or gas restart or chemicals. We've got 90% of our production back on. There's no permanent damage with anything, and the wells are starting back up and looking very good," said Vicky Holub. How about the refiners? Refiners with oil processing facilities along the Gulf Coast, the main U.S. refining hub, such as Phillips 66 and ExxonMobil, were forced to halt operations for the duration of the storm. It's quite a big hit. It was that's a shutdown of between 5 and 10 days or thereabouts. By Thursday last week, this goes back a little bit, so February 18th, the historic sub-zero temperatures in Texas and Louisiana had shut down at least 3.5 million barrels per day, which is about 20% almost of U.S. refining capacity. So guys, here's the million-dollar question. Actually, that's a multi-billion-dollar question. What does all the above mean for the energy supply and demand curve? Well, there you have it, guys. Generally, I'm quite skilled at offending people. In this case, I probably offended all the environmentalists who are really kind of leaning towards renewable energy. And I just made an entire video saying that renewable energy not only failed, but was one of the primary causes of the huge power outage that they experienced in Texas. But anyway, my last question was, what does all this mean for the supply and demand curve? Well, if all the shale producers and refineries and the pipeline carriers had to shut down for a while, we know that there is going to be an impact for sure to the supply. And in general, if the supply drops a little, then we can expect, assuming that the demand stays more or less the same, that prices will go up. But as usual, you guys are the smart ones. I'm just here to report. So why don't you let me know in the comments what you think, and we'll take it from there. If you like my videos, please subscribe, and stay healthy. Take care, and I'll see you guys soon. Bye-bye.